IMF Georgieva expects global inflation to ease to 3.8% this year and 3.4% in 2027. JP Morgan sees gold at $6,300 per ounce by year end. And President Xi urges the yuan to become a global reserve currency. Welcome to our economic bulletin with me, Hala Al-Hamalawi, and we start off with global news as the International Monetary Fund Managing Director Kristalina Georgieva has expected global inflation to ease to 3.8% this year and 3.4% in 2027, supported by softer demand and lower energy prices. Speaking at the annual Arab Fiscal Forum in Dubai, she stated that global growth has held up remarkably well, despite major shifts in geopolitics, trade policy, technology, and demographics. Georgieva stressed the need for stronger trade integration as unilateral trade agreements become more prevalent, warning that deeper integration is vital in an increasingly fragmented global trade environment. She added that trade has performed better than expected this year, continuing to grow, though at a slightly slower pace than global economic output.
There may be some softening. The very fact that the Federal Reserve decided to cut interest rates in the balance between inflation.
The Director General of the International Air Transport Association, Willie Walsh, has warned that shortages of efficient aircraft and sustainable aviation fuels, SAF, are boosting supplier profits while threatening the industry's emissions targets. He noted that reliance on older planes and limited SAF supplies are raising costs and slowing the shift to cleaner flying, with price hikes for engine parts widening the gap between airlines' slim margins and their suppliers.
We do need to see significant progress made by these key suppliers.
In Europe, the European Central Bank's quarterly survey on the access to finance of enterprises has shown that Eurozone firms expect revenues to continue rising this quarter, even as profitability comes under pressure. A net 18% of surveyed companies said that they were optimistic about turnover in the next quarter, while a net 10% reported declining profits. ECB also noted that price expectations were largely unchanged. It added that firms expect their selling prices to increase by an average of 2.9% over the next 12 months, the same as 3 months earlier, while their inflation expectations for the year ahead edged up to 2.6% from 2.5%. The Bank of England has announced plans to launch a public consultation in the coming months on the future of consumer payments, including ways to make electronic payments easier without relying on debit or credit cards. Deputy Governor Sarah Breeden said that the aim is to give UK consumers the option to pay retailers, both in-store and online, directly from their bank accounts as an alternative to card schemes. She added that increased competition could reduce transaction fees for smaller retailers, which typically pay 4 times more than large chains, while also enhancing resilience against cyber attacks and other risks. The finance ministers from Germany and Poland have stated that both countries must take joint responsibility for Europe's economic revival, as the continent's growth lags behind rivals such as the US and China. The Polish finance minister noted the need to make Europe more competitive, adding that both Poland and Germany are ready to drive this effort and develop economic policies that will restore Europe as an economic rather than purely regulatory power. For his part, the German finance minister added that the aim is to strengthen European cooperation, accelerate progress, and expect the Commission to do the same. Moving on to Asia, India's Finance Minister Nirmala Sitharaman has presented India's 2026-2027 annual budget, highlighting what she described as 12 years of economic stability, fiscal discipline, sustained growth, and moderate inflation. She noted that this performance reflected deliberate policy choices made despite periods of heightened global uncertainty and disruption. She said that the government's priority is to boost and sustain economic growth, focusing on expanding strategic manufacturing, reviving legacy industries, strengthening SMMEs, accelerating infrastructure development, ensuring long-term stability, and developing city-based economic regions. In the MENA region, the Egyptian Financial Regulatory Authority, FRA, has increased the maximum funding and insurance coverage available to micro-enterprises, aiming to boost growth, sustainability, and financial protection for this sector. According to a statement from the FRA, the maximum non-bank financing available from companies, associations, and NGOs for micro projects has been raised from 266,000 Egyptian pounds to 292,000 Egyptian pounds. It added that the maximum insurance coverage for micro enterprises has been increased to 390,000 Egyptian pounds, up from 312,500 Egyptian pounds. Moving on, the General Authority for Statistics has reported that Saudi Arabia's real gross domestic product grew by 4.5% in 2025 compared to 2024. In the fourth quarter of 2025, the economy expanded 4.9%, driven by a 5.6% increase in oil activities and 4.9% growth in the non-oil sector. Gastat added that the seasonally adjusted data showed that real GDP rose 1.1% in the fourth quarter compared with the third quarter. US President Donald Trump has stated that he had agreed on a trade deal with India and that India also agreed to stop buying Russian oil and buy more from the United States and potentially Venezuela. In a Truth Social post, Trump said that effective immediately, the United States and India have agreed to a trade deal that lowers the U.S. reciprocal tariff on Indian goods from 25% to 18%. Trump added that Modi also committed to buy more than $500 billion worth of U.S. energy, technology, agricultural, and other products. Bloomberg has reported that President Donald Trump plans to launch a strategic critical minerals stockpile with $12 billion in initial funding, aiming to protect U.S. manufacturers from supply disruptions while reducing reliance on Chinese rare earths and other metals. The initiative, called Project Volt, will combine $1.67 billion in private investment with a $10 billion loan from the U.S. Export-Import Bank to purchase and store minerals for automakers, tech companies, and other manufacturers.
Trying to get whoever wrong before the election. Days before the election, she came out with these beautiful numbers for Kamala. I guess.
In the commodities sector, oil prices fell 5% on Monday after U.S. President Donald Trump said that Iran was seriously talking with Washington, signaling de-escalation of tensions with the OPEC member, while a stronger dollar and milder weather forecasts also pressured prices. Brent crude futures were down $3.25 or 4.7% at $66.07 per barrel. U.S. West Texas Intermediate crude fell $3.27 or 5% to $61.94 per barrel. JP Morgan has expected strong central bank and investor demand to lift gold prices to $6,300 per ounce by year-end, citing an ongoing shift towards reserve diversification and the outperformance of real assets. The bank now forecasts central bank gold purchases of about 800 tons in 2026. On silver, JP Morgan struck a more cautious tone, saying that the drivers of the rally to around $80 an ounce are less clear. It added that without central bank buying support, silver could see a higher gold-to-silver ratio, though the bank expects prices to hold a higher floor of $75 to $80 an ounce. Meanwhile, gold and silver prices continued to fall on Monday as higher margin requirements at CME Group compounded last week's sharp sell-off following the nomination of Kevin Warsh as the next Federal Reserve Chair. Spot gold was down 5.2% at $4,613.99 an ounce after tumbling nearly 10% earlier in the session. U.S. gold futures for April delivery fell 2.3% to $4,636.90 an ounce. Elsewhere, spot silver fell 10.4% to $75.79 an ounce after sliding as much as 15% earlier in the session. Silver has dropped roughly 37% since hitting a record high of $121.64 last week. Chinese President Xi Jinping has urged the yuan to become a global reserve currency, making his clearest statement yet on China's ambitions to elevate its currency's international role. He said that China must build a strong currency that is widely used in global trade, investment, and foreign exchange markets, ultimately achieving reserve currency status. Xi's strong yuan strategy, coupled with U.S. President Donald Trump's tolerance for a weak dollar, is likely to further boost the yuan's value. To further understand this issue, we're joined from Hong Kong by economist Mr. Benny Kwok. Welcome to Q News, Mr. Benny. What is your assessment of President Xi Jinping's push to make the yuan a global reserve currency, and how realistic is this goal?
Hello, thank you for inviting me. The issue of so-called the Chinese yuan internationalization has been discussed for, I guess, at least 2 decades. So of course, as we all know, the Chinese yuan is not freely convertible because of the Beijing is very cautious of aware of whether the global capital would shaken the security of the Chinese economy and then of course of the region of the Chinese Communist Party. So I would say the Xi Jinping what Xi Jinping has said in the official magazines is not something new, but the official magazines just re-emphasize what Xi Jinping has said. I would say it is in time when the global investors is a little bit they have a little bit shaken of the confidence of the U.S. dollar because of the Donald Trump's geopolitical policy, and also they are very cautious of the U.S. The deficit of the financial situation of the United States is they are aware of whether it is sustainable or not. And China is another second largest economy in the world, and the currency rate of the Chinese yuan is relatively stable, even though it is not freely convertible. So and because of the trading volume and because of the relatively political stable for China, not just and also the economy, I would say that's why the Xi Jinping would like to take this chance to try to promote the Chinese yuan to many other parts of the world, especially investors, some Middle East countries, to encourage them to do more trade with China by using the Chinese yuan, to make the so-called the future contracts and other financial instruments.
Yes, which makes me want to ask you, Mr. Benny, because I want to know how might this strong yuan strategy affect China's relations, particularly with the United States, and could it fuel renewed trade tensions or a trade war?
I would say, even though China would like to do so, but in the very short to medium term, I don't think Chinese yuan could replace the U.S. dollar, because at least the volume of the exchange of the volume is still a very big difference, and also the many central banks in the world is still consider U.S. dollar, euro, Japanese yen as the major reserve currency, and the Chinese yuan is just take 1 to 2% for the reserve in central banks. So what China want to do is to try to popularize the usage of the Chinese yuan in the economic and trading activities related to China, rather than encourage the central banks to hold their reserves by using the Chinese yuan, because it is at the end it relates to whether China would open lift the ban of the financial account, and I think it is the red line for the China, and I don't think China would do so. So that's why what the Xi Jinping is emphasizing is try to.
So I understand this point from you, but I want you to briefly tell me: could other major economies such as the EU or Japan resist or support China's yuan internationalization? How might this shape global currency dynamics, in your own opinion?
I would say what China is now doing, and what Xi Jinping is emphasizing is its target is not the United States or Europe or Japan. Its target is the
to strengthen its own
world.
Currency, right?
Yeah, developing world. For example, like even in the Middle East, just like Saudi Arabia, encourage them to do activities or do the clearing with Chinese yuan, to make future contracts with Chinese yuan, or even encourage them to borrow the money from China and then pay the debt with the Chinese yuan as
Yes.
well. It is the way they try to popularize
I get
the
your
use
point.
of Chinese yuan instead of directly compete
Yes.
with the US dollar, because it is impossible
Yes.
in the short and the medium terms.
Yes. Well, from Hong Kong, that was the economist, Mr. Benny Kwok. Thank you so much, sir, for your insights. Ladies and gentlemen, this brings us to the end of our economic news bulletin. But before we wrap it up, here is a quick recap of what we have covered. IMF Georgieva expects global inflation to ease to 3.8% this year and 3.4% in 2027. JP Morgan sees gold at $6,300 per ounce by year end. And President Xi urges the yuan to become a global reserve currency. That's all for today's Economic News Bulletin. I'm Hala Al-Hamalawi. Thank you so much for joining us.